That is great. Forgot about that one. I was at these people's homes, Diane, earlier today, and it was fairly close to the train tracks. And the only thing I said could be better for a house is if it backed up directly on the train tracks. I love the sound of trains. I like taking them. I like all that good stuff. So there. But now we have Laurie. Hey, by the way, Laurie knows everything you want to know about taxes. Okay. And I had some people today in Fullerton, actually, down by the corner of Lemon and Valencia, a couple of different families. And I told them about you, and you're the one to ask about the taxes.
Oh, thank you.
So if you're out there and want to ask something to Laurie right now or during the next half hour, here we go. I'm going to try to say it like Sean. The call-in number, 951-922-3532. Kind of. What do you think?
That was good.
All right. Well, now that that's out of the way, I don't see anything on video yet, but that's probably better. I do see myself. It looks like I have color in my hair. I was going to explain why it looks that way, but I'll wait till next week. Go ahead, Laurie. Tell us everything there is about you.
Okay, well, thank you for having me again, Jay. It's nice to see you again. And some of the things we want to talk about is the 2019 tax year. My company name is Elias Income Tax, and you could reach me at 747-773-4000. Our company website is www.eliasincometax.com. You can go to our Contact Us page, and you can submit your questions there. And we typically get back to you the same day or within.
All right. You know what? My video just now popped on, and I realize I'm still in my Dr. Heckham suit. So since what you're talking about is more serious than my branding here, let me get rid of that. So just go ahead. Pay no attention to me, as most people don't. Okay, now I'm normal. See?
Okay, got it. So that's the way to contact me is either through my website or, again, the phone number is 714-773-4000. I'm an enrolled agent, which allows me to represent taxpayers on collections, audits, any type of tax issue that you may have. We do tax preparation for individuals and small businesses as well as corporations. So they're able to reach me there. So some of the things I want to talk about is for tax year 2019 is some changes, very, very minor changes. 2018 was a big tax year.
Yeah.
2019, if anything, just limits are a little bit higher, not too much different than 2018. Like the standard deduction. So the standard deduction is a little bit higher. This is for people that don't itemize, so they don't do write-offs with mortgage interest, goodwill, etc. So for a single person, that amount is $12,200. For a head of household, it's $18,350. For a married filing joint, it's $24,400, and qualifying widower is $24,400. So they're just a couple $100 each in each category, a little higher than the previous year.
I thought they were going to really raise those. Those numbers don't seem all that high, especially if you own a home.
Yeah.
And if you're making payments, that is.
Yeah. I mean, if you own a home, then obviously you'll itemize. But this is more for people that don't itemize homes. So obviously, if these limits are also important because if you made less income than that, you don't have a filing requirement. If you made more money than that, you are required to file your taxes. And also, if you're over the age of 65, you increase all of those limits by $1,650 if you're single or a head of household. I know not.
I thought you were going to say if you're over 65, you no longer have to file.
No, right? I mean, that'd be nice, but
yes, it would.
Yeah, so it's $1,650 for single head of household. If you're married and over 65, it's $1,300 per person.
What exactly is a head of household? Because I know that it's usually the wife, but I'm not sure if that's the same jargon as they use in taxes.
I mean, it could be, or for the most part, for taxes even, because they claim the child. But yeah, so for head of household, basically it's a person that can claim another dependent. Typically, they're the primary person who pays the household expenses. So usually it's a parent, like a single parent,
Okay.
or a single taxpayer takes care of a...
So that is a different category than like husband and wife filing together.
Right, because that would be married filing joint.
So if you were filing separately, one could be just a normal person, the other one could be a head of household, and you would tell them which way is best.
That is correct. Yeah, but then there's also rules on that if they're married and if they lived in the same like under the same roof, for the last 6 months of the year, or if they didn't. So there's different. That's something that does have to be asked with your tax preparer, what your best filing status is. So, and a lot of people miss out on that because they can claim a parent. I know I've discussed it in the past. If your parent, whether they live with you or they don't, you could still claim them as long as you provide for more than 50% of their household expenses.
Oh, I see.
Yeah, and even for your college kids, maybe, that don't live with you and maybe they're just temporarily going out of state for their education, you could still claim them, again, as long as you provide for more than 50% of their household expenses. You could claim them up to the age of, as long as they're under 24, so up to the age of...
Now, it's been a long time since I've had a dog to claim. It's been even longer since I've had a son to claim. But are those big differences when you do that? Is that a big difference if you have somebody to claim?
Yes, absolutely. So now, if it's a child, the tax credit is up to $2,000 if they're under the age of 17. Now, if they're over the age of 17 and they're an adult child, your credit is $500. So it's not as large, obviously, if they're an older dependent. But an important thing to note, too, that for 2019, you could still claim a dependent as long as they made under $4,200 of income. So, yeah. So they can still make a little bit of money. But again, that threshold is $4,200 now for 2019. Now, with speaking about the parent, now, a lot of parents get Social Security income. Now if they get Social Security income, that $4,200 is not. It's irrelevant because Social Security, for tax purposes, isn't considered, taxable income.
Unless you make over a certain amount, then it is.
Right. Yeah. So then there's another calculation for that. So
because I know I pay taxes on my Social Security, but that's okay.
Yeah. So I did want to talk about that because some people think, oh no, my parent receives Social Security and maybe a little bit of pension. That's okay too, but again, that amount has to be under $4,200. So if your mom gets, I don't know, $9,000 Social Security benefits and maybe $3,000 of a little W-2 job, you can still claim her. So now for a lot of people that are retiring, people think that Social Security benefits are just not taxable at all.
Yeah.
And if that's your only source of income, that is correct. You don't have to pay taxes.
Right. But I think the most prevalent time that people take Social Security is 62.
Right.
There's pros and cons. I really have a strong opinion about when. But we won't get into that this show. I've had several financial planners come out and talk about that. But when you do take it at 62, you are probably also working.
Right.
So you got to remember you're getting that smaller amount, which is okay, because I think you have to wait till you're 87 or something to break even. People don't realize they have to wait. They have to wait to get what they would have gotten before they can start counting on new money. But, usually they're working in those ages.
Right. So typically, again, that's something you have to ask your taxpayer because a good thing...
That's you, right?
Right, exactly. So they can ask me, questions because sometimes there is a formula. It's actually I don't want to make it too long or boring, but there is a formula to know it's taxable or not. And you can be working and you can be earning Social Security income, but I suggest to people you can withhold. You can ask Social Security Department to withhold.
Really? I had no idea.
Oh, really?
Yeah, you just call them up and say, I've got 40 dependents, just withhold.
No, it doesn't work that
No,
way.
no.
No. Yeah.
Okay.
So yeah, they have their brackets of what they allow you to withhold. But I mean, you can ask them to withhold the maximum amount or the smallest amount, depending on what your other income is. So, a common mistake that happens is that people retire and they start getting pension money or, other income.
I wish I had some of that. Yeah.
Yeah. And then they forget to withhold even on their pensions.
Yeah.
So,
and then it's due. It comes due.
Yep. So you have to withhold because you have to consider we're combining the income of Social Security benefits with your, pension income.
Yeah. Also, can you make quarterlies also, even if you're getting regular income like that?
You can, but I wouldn't suggest for it. I would basically, what I do with my, I have them withhold a slightly larger amount, either on their pension or their Social Security benefits.
Okay.
That way they can at least break even. We've talked about this a lot. You don't
want what you really want to do is break even, right? You don't want it. You really are not looking for a refund.
Right.
Because you're just allowing the government to hold your money for you, which they can make money on. You're lending it to them at 0% interest rate?
Right.
But, God forbid, if you owe them, it ain't going to be 0%, is it?
Right, exactly. So yeah, the ideal situation when you are retired, of course, you want to break even. I mean, whether you're retired or not, you do want to break even. Obviously, there's other factors like earned income credit, child tax credit that, the break even doesn't even matter because you're going to get benefits for being of lower income, So those are some of the things that just remember the withholding for that.
Now, you're just a kid, right?
I'm sorry?
You're just a kid, right?
I'm just a kid.
Now, when I was your age, financial planners were telling me put as much away in a retirement account as possible because when you get old, like I am now, you're going to be on a so much lower tax bracket. Well, you know what? I don't think that's happened for almost anybody.
Right.
So are they telling you that now because you're so young that you're going to have a much smaller tax bracket later?
Yeah, true. Maybe that's why. But yeah, that's what everybody pays, no matter.
Don't believe it.
Yeah, until the last day on earth.
Yeah.
So, yeah, we all pay taxes.
Yeah, exactly.
So another thing that's going on right now is, as you might know, is the open enrollment period for health insurance. So
I know. I go crazy. I turn on the TV and I watch these same people that were retiring 15 years ago. They're still retiring today on television.
Oh, really?
Well, because they play the same commercials over and over for years.
Yeah. No, that's true. That's true. So, yeah, one of the things with the open enrollment period is, to make sure you could take advantage of the health savings account and flexible savings account.
I know nothing about those. We could have a whole show on those.
Right.
I take it that's mostly for younger people.
No, you know what? No? It's actually for people that have that benefit or that offer from their company. So, I don't have that option because we're self-employed. But, if your employer happens to provide it, then it's a great thing if you could take advantage of it.
Mm-hmm.
So what that is a lot of people are not familiar with them. The people that are, I think it's amazing. I encourage my clients to take advantage.
Oh, I've heard of them for years, but I've never been, I guess I've never been able to do it. So I've never been, never gotten into it.
Right, exactly. So this is for people that, your employer will offer this. It's a special type of account. They withdraw from your paycheck every time you get paid. An amount gets set aside for your out-of-pocket medical expenses. So, and it's pre-tax dollars too, which is actually really neat. So what happens is that, you can set aside for single people, the HSA limit is $3,500. And for a family, it's $7,000. So it's pretty awesome that you could take off, for example, if you made 50,000 and you set aside 7,000 from out-of-pocket medical expenses, you're only going to be taxed as if you made 43,000.
Oh, okay.
We refer to pre-tax dollars.
So even when you spend that money for medical, you don't have to pay taxes on it. It's forever.
Correct. Yeah.
Now, what if you don't use it? What if you're healthy? Unlike myself, what if you're more like you and you don't use it?
So HSAs typically they allow you to roll them over.
Oh,
which is a good benefit.
I can roll very well, especially downhill. I just can't get paid for it. I don't know why.
Now, Jay, some of your audience doesn't see this, so they're listening to you on the radio. You might be a skinny guy.
Yeah, I might be. Well, we don't sell enough drugs to do that, to make that come about. No, everybody knows that I got this line from Ron Siegel on ESPN, and his line is that both he and I have really, really successfully survived anorexia.
Oh my goodness, that's not a problem. Right. So with the health savings account, that's why I recommend it, because of the pre-tax option, and also flexible spending accounts. Those limits are $2,700, and if you're married, both spouses can get it, so it'd be $5,400. Again, not all companies offer it. And
but let's say you get it, and you can roll over what you didn't use, right?
For HSAs, yes. For flexible spending accounts, no. Typically, the limit's only $500, so you do lose it. So it's better to just use it. Now, let's just say you want to cash it out. You do have to pay. There is a tax on it, so it's a 20% tax.
But I was just wondering, if you don't use it for several years, you have things building up, and then when you retire, can you roll it over into something else?
No, I mean, you would have to cash it out for that, but again, you would pay taxes on it then because you're not using it for medical expenses.
So you have to find, well, you could always say you're crazy and go to a mental hospital and get free room and board for a while with it, right?
I guess if you want to.
Yeah, okay. I mean, we like to have fresh ideas on this show.
Right.
Money-saving ideas, so yeah.
Right, crazy money-saving ideas, yeah. So yeah.
You know what? It's commercial time. You need to tell everybody how, who, and what you are again, and how to get a hold of you.
So my name is Laurie, and the way to get a hold of me is through my office. It's 714-773-4000, or my website, which is great because you could email me questions there too. It's www.eliasincometax.com, ELIAS, incometax.com, and go to the Contact Us page, and you could submit your questions there, and I will get back to you.
Very, very good. So go ahead and continue with the points and advice. Okay.
So the other thing for taxpayers that do itemize, now this is the people that don't have to use the standard deduction, and it's because they own a home. Typically, those are the only people now that could itemize. Typically, but the only things that are able to itemize is your property taxes.
Well, of course, if you have a reverse mortgage and you're not making payments, this advice also has to go for you, because you're not getting that income tax write-off that year because you're not paying it that year. Your heirs do 30 years down the road, which really helps to fight against capital, but that's another story. That's my story, not yours. But there are a lot of people, and especially those with a reverse mortgage and those that may have homes paid off where they don't make that payment.
Right. So they wouldn't get the write-off. So then that's where they would do the standard deduction. So, but for people that do they have to pay the property taxes, mortgage interest.
That's good write-off.
Yeah, those are still write-offs. Your state income taxes too. That's still a write-off. Charitable donations also is a write-off. One other thing too I want to touch on, because I see this more and more every year, I feel like, is gambling. Gambling.
I'm not a gambler, so life is enough of a gamble, ain't it?
Yeah, I'm not either. I used to maybe gamble a little bit in sports, but I'm not too much of a gambler. But people do go to casinos, and thankfully the casinos have a really good track record of what is won and what's lost. Obviously, if you win, they send that to the IRS. But your losses, they typically at the end of the year they send you a letter, or they keep track, like I said, of all your losses. So what happens is, I have this happen quite a bit. Like you'll get, let's say, a $10,000 win from slot machines. You'll obviously have to pay taxes on that $10,000. So what I suggest is to my client is, you have losses up to $10,000. Now, most of the time they do. It's very rare.
Yes, they do. Or more, yes.
If anything, most of the time, I have to say even more. I've seen $50,000 of wins, but I've seen $80,000 of losses. The thing is that the IRS does limit you on the wins. So that $10,000 example, for example, you could write off the $10,000. You could still itemize, because you could still write that off. Because if you're a single person and the threshold is 12,200, you're not too far off that threshold.
Yeah.
With your state income taxes, car registration, maybe Goodwill, you'll be above that limit. So that'll help reduce.
Well, some people, I mean, it's like a business or a rental property. You have income and you have expenses.
Right. So definitely I suggest to people to check with your taxpayer, make sure you try to write off some of those losses. The next thing is Goodwill. I still suggest to people, save as many receipts as you can when you do donations. Sometimes they could be larger donations. You never know if you can exceed the threshold, because if you pay a lot in state income taxes, you're with maybe just a couple $1,000s of church and Goodwill donations, you could exceed the threshold as well. So, just try to keep track as much of your Goodwill receipts as well. I know that there's some apps nowadays that can help you keep track of that. So that would be another suggestion. Obviously, just as a reminder, work deductions are no longer allowed.
I know.
That was a big.
That is very troublesome for people not me directly, because I'm still 1099, but that could change anytime. So.
Yeah, as of now, thankfully, because you are 1099, you could write everything off. The only thing that they did take away, even for 1099 people, is entertainment.
Right.
Yeah.
Not that we have time for entertainment, right?
Yeah, exactly. We're always working.
Seems like it. Which reminds me, I know we have a few minutes left, and you have a few more things to say.
That pretty much wraps it all up.
Because I wanted to ask you something very important, and then we can go back to your other subject. You saw Dr. Sleep, right?
Yes, I did.
And how come it slipped by me? Because when you said Dr. Sleep the other day, I said, "Oh yeah, that sounds familiar," and I went to look for it on the streaming things, and it just came out in the movies.
Right. Yeah.
And we have had so many shows here, especially with Chris Bissonette, which maybe you've seen, about whether we landed on the moon or not, and Stanley Kubrick. It's kind of like a whole tribute to Stanley Kubrick. All I saw was a trailer, and it looked like pieces and parts of The Shining and a little bit of Clockwork Orange and that kind of thing.
Right. I thought it was great. I mean, to be honest with you, I think it's the best film I've seen in 2019. Put it that way.
All right.
Yeah, I really liked it. It is very suspenseful. I can't say it's like super scary, not overly gory.
No, that's okay.
But I loved it. I think it was very creatively made. I mean, it had me just waiting for the next part, what's going to happen. It was really great. I mean,
wow.
For the average person, I think, to watch because it has some killings and stuff like that. A lot of
oh yeah, let's get all that in there.
Psychic things and the other world and stuff like that. But I thought it was really great. So hopefully you get to see it. Maybe.
Yeah, well, we'll have to. I was almost going to ask Chris Bissonette, if you haven't seen that on YouTube, or I can send it to you. We talk about Stanley Kubrick, who supposedly was the man that filmed the fake moon landing.
Okay.
Which I kind of still think we did land on the moon, but it's open.
All right.
I was going to have him call in, but I figured maybe we'll have another show where we concentrate on horrible things like horror movies and taxes, and have a bunch of people preordained to call in to discuss.
Right, right. Yeah, that would be awesome. That would be great. On another note, even though I know it's not a scary movie, but I just saw it last night, was Ford versus Ferrari.
Oh yeah, how was that?
I'm not a car person whatsoever, and I was kind of dreading it initially, but I know Matt Damon and are in it. I thought it was a fantastic movie too. That was really good.
Now, these cars, were they just testing each other on speed, like going straight forward, or were there curves involved?
No, it was it was curves involved. And It was like a 24-hour race back in 1956. So I don't know how they did it.
And Le Mans or whatever. Yeah.
Yeah, but it was really great. I liked it.
Oh, okay.
Yeah. And then as far as the movie I recently saw that I can't say I was too great of a fan was, I think it's called Midsummer. It looks like Midsommar.
Don't know though.
Oh, okay. Yeah, that was just a little too gruesome for me, I guess. But yeah.
Yeah, that's say that again, so I might stay away from it, wouldn't it?
Oh, it looks like Midsummer.
Okay.
Midsommer. Midsummer. It's it takes place in a Swedish town or something like that, village. And it has human sacrifice and.
All right. And no taxes there, right?
No, that's why I'm like, that's one I wouldn't recommend.
Yeah, there's some things I can handle, some I can't. I mean, we all know what we're looking at is just, raw meat or whatever.
Yeah.
Or ketchup instead of blood. But there's some things that, like I really like that one I was recommending to you. What was it? Autopsy of Jane Doe. And you said you couldn't handle that. Yeah. And there's some things my wife will say, and then I can't handle it. I go into shock. But I can handle so much. It just depends. I think everybody has their own little something.
Right. Yeah, no, exactly. But that Dr. Sleep is really good. I think you'll like it. So. Yeah,
it's got a strange name for that, for what it really is. Because, I've heard for such a long time they were making 1 minute. 1 minute, Sean says 1 minute. I heard about a sequel to The Shining. This must be what they were talking about, but it's really not a sequel to The Shining. It's
no. Yeah, I don't think so. So yeah, but I mean, check it out. Let me know how it is then.
Now we know, of course. You know what? We went back and watched season 1 and 2 of Stranger Things before going on to the third one now.
Uh-huh.
And I think I recommended you watch Dark.
No, I never saw that.
On Netflix, highly recommend, about the nature of time.
Okay.
And I started watching Black Spot, which means that it's from France. Detective story, but it's got a lot of weird things in it. Okay. So I'll recommend that to everybody too. But you know what? I better recommend.